Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about H World Group Limited latest report. H World Group Limited offers a diverse range of businesses and services through its extensive portfolio of hotel brands. The company operates leased and owned hotels, as well as managed and franchised properties across various locations in the People's Republic of China. Some of the notable hotel brands under H World Group Limited include Hanting Hotel, Nihao Hotel, Hai Inn, Elan Hotel, Zleep Hotels, Ibis Hotel, JI Hotel, Orange Hotel, Starway Hotel, Ibis Styles Hotel, CDGO Hotel, Crystal Orange Hotel, Intercity Hotel, Manxin Hotel, Mercure Hotel, Madison Hotel, Novotel Hotel, Joya Hotel, Blossom House, Stagenberger Hotels and Resorts, Jazz in the City, Grand Mercure, Stagenberger Icon, and Song Hotels. This extensive list of brands demonstrates the company's commitment to providing a wide range of accommodation options for travelers. By offering a diverse selection of hotel brands, H World Group Limited aims to cater to various customer preferences and needs, making it a prominent player in the hospitality industry in China. H World Group Limited market capitalization of $124 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that H World Group Limited holds a significant advantage in their industry. H World Group Limited trades at a higher price-to-earnings ratio of 30 times and a higher price-to-book ratio of 0.85 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 80% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 4.08%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through an analysis of the key factors affecting the company's financial performance. On the positive side, hotel turnover has seen significant increases, with an 18.4% rise in Q4 2025 and 16.4% for FY 2025. The expansion of managed and franchised M&F revenue has also been substantial, with a 21% increase in Q4 2025 and 23.1% for FY 2025. The opening of new hotels is expected to contribute to revenue growth, with an estimated 2,300 new hotels set to open in 2026. Additionally, the company has reported increases in average daily rate ADR and blended revenue per available room RevPAR, indicating a positive trend in occupancy rates. On the other hand, the primary drivers of revenue decline include the closure of hotels, with an estimated 600-700 closures planned for 2026. The Legacy DH segment has also seen a decline in revenue, with a -1.8% decrease in FY 2025. Furthermore, leased and owned hotels have experienced a significant decline, with a -11% drop in FY 2024 compared to FY 2025. The managed and franchised hotels have also seen a decline of -23% in FY 2024 compared to FY 2025, while others have experienced a -21% decline. The Legacy DH elimination has also contributed to the revenue decline. Overall, these factors highlight the importance of monitoring hotel turnover, M&F revenue, and occupancy rates to identify areas for growth or improvement. The net income of the company experienced a significant increase between Q4 2024 and Q4 2025, rising by 23%. This growth was also observed on a yearly basis, with a 65% increase from 2024 to 2025. Furthermore, there was a notable surge in net income during Q3 2025 compared to Q4 2024, increasing by 127%. However, the profit margins showed mixed results. The operating profit margin improved significantly, rising by 14.1 percentage points between Q4 2024 and Q4 2025, as well as a 5.1 percentage point increase from 2024 to 2025 on a yearly basis. On the other hand, the EBITDA margin experienced a decline, decreasing from 296% in 2024 to 231% in 2025. The reasons behind these changes are not explicitly stated in the provided text, but they may be attributed to various factors such as changes in market conditions, operational efficiency improvements, or strategic decisions made by the company's management. The company is indeed generating positive operating cash flow. This is evident from the financial statements provided on various pages of the report. On page 10, it is explicitly stated that the company has a net cash balance of RMB 4.7 billion, $675 million, indicating a strong cash position. Furthermore, the report confirms this trend in subsequent quarters and years. Page 19 highlights positive operating cash flow for the periods ending December 31, 2024, September 30, 2025, and December 31, 2025. This consistency suggests that the company's operations are generating sufficient cash to cover its expenses. The specific numbers provided on page 20 reinforce this conclusion. In 2024, net cash provided by operating activities was RMB 2341, $344, while in 2025 it increased to RMB 3267, $429. These figures demonstrate a steady improvement in the company's ability to generate positive operating cash flow. The company's debt level and interest expenses have undergone significant changes. The total debt as of December 31, 2025 stands at RMB 5.8 billion, a notable increase from previous years. However, this is largely driven by the substantial rise in short-term debt, which increased by 509% to RMB 5,337 million. In contrast, long-term debt has decreased significantly, dropping by 89% to RMB 479 million. Despite the fluctuations in total debt, interest expenses have consistently risen over the past year. In Q3 2025, interest expenses increased by RMB 12 million to RMB 86 million compared to the same period last year. Furthermore, a more substantial increase of RMB 19 million was observed in 2025 compared to 2024, with interest expenses reaching RMB 337 million. These changes indicate that the company is facing higher borrowing costs and may need to reassess its debt management strategies. Management is optimistic about the company's outlook, having exceeded revenue guidance in Q4 with an 8.3% year-over-year increase. Looking ahead to 2026, they expect revenue growth of 2-6% or 5-9% excluding a specific segment, DH. To drive this growth, management plans to expand their high-quality hotel network and strengthen brand positioning through service excellence. They also aim to enhance member-centric sales capabilities, deepen technology and AI empowerment, and focus on cost reduction outside China. Additionally, they will optimize asset structure and refine core brands' positioning and value proposition in key markets. Overall, the company is positioned for steady growth and improvement in 2026. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out to its ordinary shareholders, with each share receiving $0.13 per payment. This translates to a total payout of approximately $400 million. Additionally, the company's ADS holders also receive a corresponding dividend of $0.30 per share. Furthermore, the company has also engaged in share buybacks, purchasing back shares worth around $110 million. These actions demonstrate the company's commitment to returning value to its shareholders and maintaining a strong financial position. That concludes the financial summary for H World Group Limited. Feel free to comment below, and I will be happy to answer them when possible.